Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. The New York exchanges were in record territory once again. The S&P 500 has set new highs in 10 of the last 12 weeks. He looks at precious metals, crude, and the U.S. and Canadian dollars. Publisher of the Campbell Real Estate Timing Letter, Robert Campbell, checks in from San Diego. He gives us a lowdown on U.S. real estate. Is the exodus from California bringing down house prices there? We talked to Hilliard MacBeth, author of the second edition of When the Bubble Burst, Surviving the Canadian Real Estate Crash, about what rampant inflation will do to the real estate market. Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Ross Clark right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on Twitter at ChartsByRoss. Welcome back to This Week in Money.
Always a pleasure, Jim.
Ross, the markets once again in New York setting record highs. When is this record going to end?
Yeah, well, actually, we've got a few things that we can take a look at here. Back a month ago, actually, October the 4th, we got that signal, actually a rare type of signal on the NASDAQ as a buy, and it's tacked on 2,000 points since then. And as of the last 2 days here, we've got basically the opposite type of signal. We've got very good overbought readings, both in the NASDAQ and in the S&P. We've got what we call upside exhaustions, and we also have some sequential counts, so that would be combo 13s. And it takes the better part of, a month usually, and can be up to 3 months before that signal comes into place. And the countdown is now complete on that. So that puts us into rarefied territory. And the probability is that within 10 days or so, we probably will see this market roll and have a bit of a correction. The other note here that I've got, this was an interesting one. So the S&P for 10 of the last 12 days has made new all-time high closes, and it's been up for 16 out of the last 18 days. Now, this is rare. This has only happened 3 times historically. The last time was back in July of 1955. And what you would expect here out of that is that you go into a bit of a choppy phase. However, within the 2 to 3 month period from here, the market averages a gain of over 5%. So, this would be pretty much in line with what I would anticipate with my work, that, you get this correction, and after that, you start working your way back up, because, we're in the first month of what is typically a good 6-month run through April. So think of the market as good, but in need of a bit of a pullback.
Ross, what's going on in the crude market?
Crude, good correction here. Got some nice overbought readings a few weeks ago, and it corrected back to $78. That was right back to the 50-day moving average. That's a pretty important one when you look at crude over the years. And a decent bounce back. We're looking at probably here a bit of a trading range. The same type of thing is happening in terms of natural gas. Overbought about 3 weeks ago on that one, and has had 2 good tests of support, but seems to be holding the $5 level. And so for both of these, you got the potential to work back and test the highs again.
What's happening in the precious metal market?
This has been good to us. The silver market got some good overbought readings 10 days ago, and we were looking for a correction to carry us back down to the 20 and 50-day moving averages, and likely correct about half of the rally off the lows. Well, we had that as of Monday, and just all the pieces are fitting in nicely here. This last big rally that we had in silver still is not confirming the overall strength that we've seen in the CRB index in the last year. So typically what would happen here is you'd have a couple of tests of resistance in silver. The first one was up at 2480. You get this pullback, and now we're looking, and we closed the week off, I think, around 2420. So it's up about $1 off the Monday lows. We're expecting it to go up and likely take out the $25 resistance level. But the key here is going to be look at the response from the market once it gets through that high. Because if we can't get any momentum once it pushes through that high, and it gives back the gains, starts to come back inside that breakout level, then you can see a pretty solid correction back towards $22. The other precious metal, gold, held up much better on the recent correction this week. Closed up at 1820. So that is highest levels that we've seen in silver, or in the gold market, since the first week of September. So it's looking pretty good. The only drawback here is that the miners are just not showing a lot of life right now. So my inclination will be that if, as and when the silver goes through 25, we'll be looking to see how the other parts of the complex are fitting in together. But if they can't put in new highs above resistance, then we're probably looking for a lower low and a better buying opportunity in the next couple of months.
What's happening with the U.S. and Canadian dollars?
Great employment numbers in the States as of today, and we ended up, 530,000 jobs were added. I mean, that's a huge number there, actually above expectations. So U.S. dollar is doing well. We've been looking at this trading range that it's been in, with the high of 94.5 and the low down in the low 93s. And as of the week, it's closed up right towards the top end of that trading range. And, we're still of the mindset that this U.S. dollar is going to see continued strength and manage to break out of this consolidation that it's had. The other side of the coin, Canadian dollar, just spent a pretty quiet week. Nothing really big happening there. And, that's when you take a look at it as a commodity currency. We had this correction in crude oil and a bounce back. But if you look at the soft commodities, the agricultural ones, the corn, wheat, oats, they've been having trouble recently putting on any sustained rallies. And, the Canadian is a resource-based commodity. And if we take a look also at, say, the copper market, there it's stuck in the 430 to 435 range, just biding its time. So for all that I see this as a 5-year base in the Canadian dollar with lots of potential as we move forward, right now it just doesn't seem to have the legs to get up and go.
Ross, thank you so much for the update.
Good to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on Twitter at ChartsByRoss. Coming up, Robert Campbell, next on This Week in Money.
Always consult your investment professional before making any investment decision. Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Robert Campbell, publisher of the Campbell Real Estate Timing Letter. He's speaking to us from San Diego. Bob, when's the next Real Estate Timing Letter coming out?
It's coming out. I'm working on it right now. It'll be out November 15th. I publish 6 timing letters per year, once every 2 months. It's 10 pages. I cover about 26 major markets in the country, in the U.S. 6 are in California. So I really enjoy what I do. I developed a timing model 19 years ago, almost 20 years now ago, that's very accurate as forecasting major trend changes in the real estate markets. And it's been tested over time, and it's right about 80 to 90% of the time. So I'm really happy that I was able to create something like that gives people about a 3-month head warning over everybody else about what's likely to come next, because that's what it's all about. So, and so I published that, and it's I really enjoy doing it, and it's really, really fascinating topic.
How was the live event you did a couple of weeks ago?
Oh, it was really good. I did a live event, everybody. I think it was, is inflation knocking on the door or deflation? And the subtitle was Inflate or Die. And I talked about all of the ideas we had about that ideas and evidence backing, rising inflation, how you should invest, how it's likely to, how you should adjust your portfolio for it, ideally, and all those kind of things, and how to survive it on your own, little things like that, like, gee, where's the money going to come from for food? They go, yeah, good question. So all those things. So it was really good. I had about 25, 30 people there, which is about half normal, but it was all live, and it was really great seeing everybody face to face. No masks, no social distancing, nothing. In fact, the topic never came up, interestingly, not once. And so I really enjoyed it, and it's nice being, back doing face-to-face presentations again, because I really enjoy that.
The Dow's at 36,000 points, the NASDAQ about 16,000. Where do you think we go from here?
Well, you got to go with the trend, okay? I mean, it's like if you're curious what way the trend is, get a chart pattern and pull it back about 10 feet from an 11-year-old kid and say, which way is that going? And the kid's going to go, it's going up. Are you blind? And you go, okay, it's up. You got to buy. You got to still be in this thing. I mean, unless you're so risk adverse. I mean, you can't say that it's going to fall from these levels. There's no indication of that. I'll tell you what could push that down would be a recession. And if the government quits, ever stops its money printing operations, even slows down a little bit, that could cause a recession and take the stock market down.
Inflation versus stagflation, how bad could things get before they get better?
Well, they can get really bad. I mean, we don't have a lot of inflationary episodes here in the United States. We had one during the 70s and early 80s, and where the U.S. dollar lost half its value during that period of time, and inflation got up to over 13%. And who was it? Paul Volcker, who was Fed chairman, had to raise interest rates to save the dollar, which was the world reserve currency, or we were going to go into hyperinflation. And when slammed us into recessions in 80 and 81 back to back that were really steep recessions. So I mean, that stuff can happen. So how high is inflation going to go? Nobody knows. Nobody knows. All you can say is the trend is up. It's significantly up, and it's probably not transitory. There's a lot of things in life that are transitory. I mean, in fact, everything in life is transitory. Pleasure is transitory, pain's transitory. Real estate booms are transitory, real estate busts are transitory. But you just got to go with the trend on this thing and say inflation is a problem. Inflation's a problem. I've lived through it personally. I've studied it from an economic standpoint, so I know inflation does more harm than good to the majority of the people.
Historically, are stocks a good or bad place to have your money during an inflation or deflation?
Well, aside from the specific, up and down cycles, from a long-term perspective, let's say go back 100 years, the stock market has performed better on an inflation-adjusted basis, better than any other asset class. It's gone up 5.5% above the rate of inflation, compounded growth over 100 years. That's as good as it gets. Real estate, for example, like here in the United States, that's gone up about 1 to 2% in the recent past, and adjusted for inflation. And here in California, we do even better. We're in the 3 to 4 range. That's why it's boom and bust. When things are really good, they're really good. All of a sudden, the crash comes, and most people, get crushed.
What's the latest on the Fed, the bond market, and mortgage rates?
Well, what the Fed's doing is, right now, the Fed has to pump like $3 trillion a year into the economy, just to keep the wheels on the cart. All of a sudden, right now, with baby boomer retirements being what they are, the baby boomers are coming into force, meaning Social Security obligations have increased. With this COVID thing, a lot of people have either got out of the workforce, or all of a sudden they decide to retire. And I just learned the other day that they've only been tracking this since 2014, but since 2014, in 2021, this was the highest number of people retiring on a percentage basis of any year in the past. In other words, people are retiring right now. They just want out of the workforce, and what's the magic of 62? That's the soonest you can retire and still be on Social Security. So that's the earliest, and people are retiring. So I think that there's a lot of change happening right now.
How are the U.S. real estate markets looking?
Oh, they're just booming. They're appreciating at record, historically high year-over-year rates of growth. Couldn't be better. I just can't wait. Hey, look, I'm all for riding a trend. That's what I do. I'm a trend. If you're going to get anywhere in life, you better have the wind at your back most of the time. So you've got to ride the trends on this kind of stuff. But then you look at it, I'm not personally speculating in real estate anymore. I mean, I've done a ton of that in the past that, which qualifies me to write a letter like I do. But it's just hot right now. Super, super hot. Everything's really hot. I could go out and build new homes and stuff like that and make a good living and all that, or even flip homes, even though that's like a full-time job. But I'm not going to do any of those things anymore in my life. It's not that I can't do them. I don't want to do them. You know what? I have a lifestyle. It cuts into my gym time and all that stuff. I mean, there's other things that I do where I'm invested in things, but that's a job, guys. That's a business. I've already got a business. I got this business, and I like it. And believe me, it's not start at 6 in the morning and end at 6 at night, like building, developing, and flipping. To do those well, you got to really be on your game, and it can be very profitable. But it's day to day, supervision, planning, scheduling, just bam, 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 bam. And I just don't want to work that hard anymore. That's the rat race. I'm not going to compete with everybody at that level. I'd rather compete with people on an intellectual level.
We keep hearing people are leaving California. What's happening with California real estate?
Well, California real estate, is maybe the real estate in California is appreciating maybe like the 5th highest in the United States. The first of which is Idaho, second Montana. I don't know what comes in between there. But our rates of home appreciation are like super high. And everybody tells me everybody's leaving California. Okay. Me being the economist and understanding supply and demand, I'm going, if everybody's leaving, if California has a net outflow of people, why is real estate still going up? Answer that. And everybody looks at me and go, so I'm like hardcore. I just don't see it happen. I think that's more people just making up shit than anything else. Now, when real estate starts going down, that's a good time to make that argument. Not only is real estate down going because, the trend has changed and now we're in a down cycle. But then a lot of those people that own those homes or other homes decided it's time to get out of California, and they add to the inventory as well to drive it down even harder. So, I mean, those are all things that we can talk about and just like kind of discuss. But is there any answer? Do you know for sure any of that's going to happen? No. Zero.
Do real estate prices show people moving to Florida for freedom?
I don't know anything about Florida. I like Florida because it's sunny and there's beaches. I live in San Diego, you guys. I live on the beach. But Florida's okay. Everybody talks about everybody's moving to Florida. How come, like Miami real estate, for example, in the last year has been one of the underperformers of all the major 20 cities. If in fact that it's like everybody's moving to Florida, that doesn't make any sense either. If everybody's moving to Florida, guess what? Real estate prices in Florida are going to really, really accelerate fast. And the reverse, you got to rely on something, you guys. And just think supply and demand. If you start thinking more supply and demand, you'll have better answers to a lot of your questions than most experts can give you.
What's happening with Zillow?
Zillow is I'm a stock trader. In my spare time, which is like almost zero, I trade stocks. So anyway, somebody was telling me about Zillow the other day, so I looked at a chart pattern of it. And it was in, I think it was, April of this year, 2021, Zillow stock hit $210 a share. 8 months later, it was at 65. You know what that shows you guys? Like, there are no guarantees in this world. Was that stock worth 195? I don't know, but it's been in a long-term downtrend since then and gave up all those gains and more. And it's just kind of a story like, you guys, that there's risk in, who would think during these economic times, and Zillow is the most well-known, real estate name on the internet. Who could think that they could lose this much money? I mean, who the hell's running that show there? Have they ever been around real estate before?
How far away from the mean are real estate markets in the U.S.?
Well, I would say nationally, let's look at it on an inflation-adjusted basis. I think in here in California, for prices to revert back to the mean, that would mean about a 35% price correction from current levels. And nationally, it would have to be somewhere in the 20% range, somewhere in there. So what that means is, let's go to California. So I said, ex-inflation, housing prices are going to be down 35% in a year. I mean, 35% at the bottom. They'll fall 35%. Let's say it takes 4 years to get to the bottom. So you divide, let's say 32. You divide by, you got like, that's 4. So see, what do I want to say about this? How that works. To fall that much, 35%. In other words, if prices could stay the same as they are right now in California, and inflation could go up at 8% per year for the next 4 years, and on a nominal basis, California real estate prices, you'd think there was no price change at all. But adjusting for inflation, even using the estimated numbers the government uses, you'd be down, your purchasing power of the money that you held would be down 30 to 35%. That's how you have to start looking at this stuff, guys. Especially when you get during inflationary periods, where all of a sudden inflation's going off at 13% a year, and all of a sudden your house didn't drop anything in value that year on a nominal basis. It was worth $100,000, in January. It's worth $100,000 in December. But inflation went off at 13. You lost 13% of the purchasing power of your money, you guys. That's a lot. So you got to be aware of these trends all the time. What's happening, and adjust for inflation. So there's some really exciting, this is going to be a really exciting new period, especially for me now as an economist, because I find this so fascinating. One of the reasons I want to live to be 100 and I'm super healthy and super fit is that I can't wait to see how this all turns out, Jim.
Could the COVID real estate boom turn into a bust?
Absolutely. I was thinking about that the other day. Okay, everything was heading down in 2018, 2019. The yield curve inverted, which has about 100%, track record, positive track record for predicting a recession. So here we were going. Then all of a sudden, COVID hit, which you think would be like throwing an A-bomb on a city. Oh, is it just the opposite? Things took off to the upside. I'm starting to think. You just have to think about this, guys. If things could turn that dramatically to the upside, who's to say they can't turn that dramatically to the downside? If all this shit starts happening, like inflation goes up. Interest rates, mortgage rates typically carry about a 2 percentage point spread above the rate of inflation. So even using the government numbers right now, 5.5%, you know what mortgage rates should be historically? And you go back and look at it, and they go, sure, they always carry that spread. It should be around 7.5%. What are they? They're around 3.25 or something. So they're way, way under the market. Who would lend their money to the U.S. government for 30 years at like 2.2%, knowing that inflation is going off at 5.5%? You're losing 2.2. You're losing 3% of your money per year just due to loss of purchasing power. So you hold that government security for 30 years, 3% times 30, you've lost all your money from purchasing power. Yeah, they'll give you $1,000 back for the bond. What will it buy? I don't know. A candy bar? So, I mean, you gotta look at it like that. That's how devastating inflation is. I mean, life's not hard enough without rising inflation.
Were the elections in the U.S. this week important?
Well, I'm apolitical. I think they're both mafia organizations that, they both deserve each other. But I sense there may be a ray of hope. All these blue states, those are the states occupied by the communists, right? Have I got my colors right? Show you. The blue states, all of a sudden, they're starting to go red. With red people, like in Seattle or something, the mayor was a Republican. What's up with that? And what that shows me is the tide has changed, Jim. The tide has turned. The rising hysteria has peaked, and it's back. It's on its way, reverting back to normal. Some sense of normal. Not the level of hysteria it's at. I sense that. So I sense this whole thing is, that things going back to the old normal anytime soon. Probably not. But at least we're not this crazy, bunch of crazy people divided in the United States. And maybe there'll be a few less crazy people, which will make this place better.
Could the wheels be falling off the election rigging machine?
Well, I would think so. I mean, somebody said, I don't follow that stuff anymore. I was just glad to see that, the Democrats got out, because I just don't agree with any of their policies at all. And I think that most of them are complete a-holes to boot. So, but, the fact that I think, yeah, maybe.
Canada and Japan have stopped printing money. Could this be good or bad for the economies of Canada and Japan?
Bad. It's very bad. And all this stuff, you watch. They'll stop printing money. These economies are addicted to credit, cheap credit, to stay alive. They're like sharks. You got to keep moving. These guys everybody's running a big deficit. So the printing presses are running. So this could just end up being devastating for everybody. And now that they're going to raise interest rates, carrying these huge debt loads, and they're going to raise interest rates, the markets are going to freak out, and they'll reverse course back to the printing presses in a New York second.
Does it look like mandatory vaccines are being used to shut down economies?
To me, it's so crazy that to even think that we're even dealing with this kind of nonsense. So, I know what they're trying to do, I guess. They're trying to get everybody vaxxed up for some reason. But there's a strong, 10 to 20% of us that, we know who each other is. And that's all it takes is to shut things down. When these American Airlines had to cancel 1,500 flights, because of bad weather. Total BS. Total BS. I know ex-American airline pilot. He's got buddies. He said it's a sick in. They all called in sick the same day. They're not showing up. All of a sudden, so now they had to cancel all these flights. Pretty soon they go, okay, guys, come back. No vaccine required. See, they keep pulling this stuff. You know what? People, the employees, they're going to get pissed off. What are you doing? I don't trust you anymore. I thought you were a good organization. You guys are a bunch of Nazis going back and forth. I mean, we all have certain constitutional and civil rights. Let's just go with those, okay? I mean, all of a sudden these people having to say, oh, there's real strict, vaccination requirements, and then nobody shows up at work, and the next day all the requirements are off. That develops distrust. It's going to piss people. You think people are going to say, oh, I really love this company? No, they're not. They're going to go, these guys are a bunch of a-holes. And that's going to develop, and I don't know where that's going, but I know a lot of people feel that way. There's no loyalty anymore to a corporation. Remember back, how many years ago? Maybe 30 years ago? When people used to say, you know what my goal is? Is to work my way up the corporate ladder. When's the last time you heard that, Jim?
Does it look like we're in for planned shortages this winter?
Well, yeah, sure. I mean, natural gas is something, what's the price? I even forgot, 700% or triple, whatever. People, they're having to buy natural gas for heat this winter. These guys are going to be in for a shock, what their bills are going to be. Now, how's that going to impact? I don't know, but I'll be watching. I'll be watching human behavior, see if I can get some early warning hints, you know what I mean?
Is work from home likely to continue long term?
I think it is. I think people have learned that, they're not going to travel. Let's say you live in L.A. Most people in L.A. commute an hour each way. Now, all of a sudden, you don't have to commute an hour each way to work, and you can work out of your home. Oh, what a huge benefit. So I think this is going to be around a lot longer than people think.
Could work from home lead to growth in entrepreneurship?
I don't know. I can't, I think being an entrepreneur nowadays is harder than it's ever been. Even though the will is there, the ability to get by the government friggin' red tape BS almost, makes it not worth it. Oh, you need this license, yeah, you need this designation, you need all this, and little Joey just graduated from USC. He's going to tell you how to run your business successfully. How many of those businesses that Joey runs? Oh no, he's just a college kid that's just real smart. He'll help you out.
What's the first thought that comes to your mind when you hear climate change? Is that a word that just occurred, that sound that occurred? I just don't believe it. I believe it's all a big scam. I mean, do I believe the climate's changed a little bit over time? Yeah. Do I believe the end of the world's going to be anytime soon because of climate change? No. I'd bet huge odds on that. 100 to 1. Tesla passes the $1 trillion mark cap. What are your thoughts on Elon Musk?
Oh, you know what? Elon Musk, Tom and I were talking the other day, and we're looking up, I said, who's the richest guy in the world? And I said, I think it could be Elon Musk. And so I looked it up, and it wasn't. He's number 2. Bezos is number 1, according to this little poll I have there. Bezos is worth $200 billion, and Elon Musk is only worth $191 billion. And I said, who do you admire most? And I go, hands down, Elon Musk. What an innovator. What an innovator that he is, Look at the things this guy does, Bezos, I don't respect Bezos. I don't like Amazon. Amazon has predatory tactics against its own people there, which I wouldn't tolerate. So, but I mean, look what he's done. He's created this SpaceX. Okay, this rocket ship company that launches satellites into outer space. Some people estimate the value of that. That's already at like $100 billion. They think it's worth that, $100 billion. And so people are saying, you know what? I wouldn't be surprised if Elon Musk becomes the first trillionaire. I mean, who would you rather see as a trillionaire? Bezos or Elon Musk? To me, hands down, Elon Musk. He's a real character, and everybody thinks, look, Just look at what he's done. He started a car manufacturing company from scratch. How many people have done that in the last 100 years? Nobody. And it's like the biggest car company in the world. Explain it. I can't. But he's doing it. So you got to give your hats off to the guy. And, and I think he's a good guy. I sense, he's leaving California. He's moving his operations to Texas or something because the Californians are so crazy. I mean, that shows good sense.
How important is it in life to be open to challenges, learn from failures, and overcome adversity?
Well, guys, that for those of you that don't know me, I mean, I appear on this with House Street once a month. I'm 74 years old, and I think it's really, really important to be challenging yourself all the way, and that's what empowers you to do things. You always got to be pushing your limit some way. And like one of the ways that I'm doing that is I'm practicing to play baseball in an over 65 hardball league. In fact, I just practiced it an hour before I started this interview. We went out and played for an hour and 15 minutes. We threw the ball. We hit grounders to each other. We hit fly balls to each other, and we played. We hit with each other. Gosh, I forgot what you do. So we hit, and I'll tell you guys, it's unbelievable that all of a sudden you push yourself, and that you just get a little better and a little better and a little better, and it's really empowering that you can do that. I mean, like, am I hitting the ball as far as major leaguers? No, but I'm hitting the ball 290 feet. That's a long way. And I'm going, wow, I can still do this. I can still throw. I can still hit a ball a long way, which I could always do. I mean, and I'm not, 35 years old anymore. I'm 74. But you take the time and you go, I can do this. And all of a sudden you do it, and it's really empowering, guys. I don't care, maybe it's some other thing you do. I happen to like major sports, and I like things where there's a little strength involved. I know a lot of older people are playing pickleball nowadays. And I said, what's pickleball? And I said, what's a game played on a little court? And I said, what kind of ball is it? And they go, it's a wiffle ball. And I went, what? I said, I played with a wiffle ball when I was like 6 years old. So, I mean, it's something like that. And I guess if that's all you can play, that's all you can play. But if you can do better than that, do something like maybe you learn how to sprint or something like that that's kind of strength oriented. It's really empowering, guys. I mean, you just don't know how good it makes me feel to hit a ball that far. I mean, and that's a long way. I go, wow, I can still do this. And that's pretty cool. That's pretty cool. So you need, and I mean, aside from that, it's all the physical. You need to work out and stay physically fit. You need to eat right. You need to eat less. Eat the right foods, avoid the wrong foods. Eat less of both. Drink water. Work out. Work your muscles every day. Work your muscles every day. And for you guys that aren't, that want to know about staying healthy and that kind of thing, here's one of my secrets. It's all about the process, not the outcome. You have to have a good process. You have to know what to do. I mean, that's reasonably, well, there's a lot of good ways to get in shape, but you have to have a plan. You gotta go, okay, what kind of weights am I gonna lift? What kind of aerobic running am I gonna do? Do that kind of, what am I gonna eat? What am I gonna avoid? How much water am I gonna drink? What kind of supplements am I gonna take? That are most likely to yield the highest benefits. And just do that every day. Every day. And how fast are things going to change for you? I don't know. You don't know. You can't determine the outcome as much as you can in the process. But I'll tell you, knowing what I know and what I'm going to be teaching my followers, I'm putting together a 20 to 30 page report on my 50 years of experiences and observations and research on what it takes to be healthy and stay young. And I'll say, here's what I've done. And I guarantee you, if you do what I've done, you'll live a better life. I promise you. Other variations, of course, but I'm just showing you with the ideas, the ideas that, the experiments that I've done and come up with. Because, after a while, guys, after you've been doing this 50 years, pretty soon you know what works the best and what doesn't work. So, and the diet's the hard part. Keeping your weight down is the hard part, but you gotta do it. You gotta do it. So all those kind of things, but health is where it's at, but focus on the process. Focus on the process, not the outcome. But I used to teach the kids. I said, I want you to think about one thing only when you're up in this batter's box. Not where you stand, like blah, 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 how far away, all that kind of stuff, and how you hold the bat. I want you to focus on one thing, and one thing only. I want you to watch the bat hitting the ball. So your head's right there on the ball. I guarantee you better results. You'll have better outcomes as a hitter just by that one simple little trick. Barrel it up. Hit the ball. Hit the ball. Make sure you hit the ball. Just hit the ball hard. Hit it. And that's what you need to do. You just hit the ball hard, barrel up the bat, hit the ball hard. You hit a hard line drive somewhere. It's hard for people to move to get it. I mean, is that the most satisfying thing about playing baseball? No. The most satisfying thing in playing baseball is hitting a baseball 400 feet over the fence where everybody goes, oh my God, how'd that guy do that? So that's my approach, guys. You gotta be pushing yourself like this. You gotta stay in shape. I'm in shape. And believe me, that's not because of luck, by design. But now I'm out there, at my age playing baseball at a fairly good level. And, most people can't believe it.
Is there a certain type of person that lives for challenges?
I don't know if that's inherent or not. I think maybe it is. I mean, I've gotten inspired by certain people. I've gotten inspired by certain people that are like super high performers and real live people. For example, Laird Hamilton. He wrote a book in 2008 that really, really changed my mind. That guy's such a go-for-it guy. He's one of the best athletes in the whole world. And it's all about lifestyle. And Joe Rogan, it's all about lifestyle. Those guys are real men's men. And that's what I try to be. That's what I enjoy most. Doing things guys do. Like hitting the crap out of a baseball or, surfing a 50-foot wave. I mean, those are hard things to do. And these guys that can do it at that level, I mean, and it's all in their attitude. Laird Hamilton, I just love that guy. That he married a gal named Gabby Reese, who was, I think she was an Olympic volleyball player. Beautiful girl. I think she was on the cover of Playboy or in Playboy or something like that. Doing something. She was so beautiful. And they met, and 9 days after Gabby interviewed him in Hawaii, he flew over to the mainland and met her. They moved in together 9 days, and they've still been together ever since. And Gabby, she's like a world-class athlete in her own. What she said was, she goes, I knew who Laird Hamilton was within an hour of knowing him. And he said, there was no change in this guy. This guy isn't going to change for anything. So I have to make a decision. Is this the way I want to live the rest of my life? And if not, I should bail out. She stayed with him. But she knew from the start, that guy is just, he's on a mission. He's just so motivated and pushed to do unbelievable things. And they asked her, they said, how many kids they have? And Gabby said, we have 2 girls. And the reporter said, would you guys like to have a boy? And she said, there's enough testosterone around this household already. I mean, those are the guys that I idolize. Those guys are just pushing it. Laird Hamilton, most of you guys, if you don't know, he's a big wave surfer, the most famous big wave surfer in the United States. He's had 1,000 stitches, Jim. 1,000. Is that going for it? And he's still alive.
If people don't like single-digit returns from their broker and want to take the challenge of getting higher returns, are failures and the need to overcome adversity likely part of the learning process?
Oh, that's the way we all learn, by our errors. I mean, I mentioned earlier, I think that I trade the market from time to time. When I have the time to look at it and things like that. In fact, yesterday I bought, gold was down like $25 an ounce, and I bought it. And I sold it on the open market, on the open today. It gapped open. It was up like, $25. And I made 1.5% on that trade in 2 days. And you know how much thinking went into me making that trade, Jim? 0. That's my system. That's my process. I don't focus on the outcome. I focus on the process because I know I have a winning system. So you just keep playing the system. I'm just kind of telling you that, I could trade for a living. I'm in the 5% of all people that consistently trade profitably in the market. It's a low percentage, but I've got my system. I know. I'll beat you. You know, and I'm a singles hitter. That's why I'm in and out. I'm a hit and run type of investor because I know that works for me psychologically at this point in my life. And I make between, you know, if I traded full time, which I don't, I would make between 10 and 12% per year on my money. And the equity drawdowns would be in the range of 2 to 3% max. There's no equity drawdowns to what I do. So I make a relatively high return with no equity drawdown. Those are the type of investments I like, Jim. With a high upside, low downside. Then you play systems like that, not the reverse.
We know you're not giving health advice, but do you take supplements for your health?
Oh yeah. I'm glad we're talking about that. For all you guys out there, I think my wife and I take about 7 supplements. You know, I know we take fish oil, we take vitamin C, we take vitamin D, we take zinc, which is my magic all-time best thing I take, and now we just started taking a supplement called quercetin. You ever heard of that? Quercetin. And it starts with a Q. And the reason we just started taking that is zinc is the most amazing supplement in the world, guys. And what that quercetin does, it helps the zinc get in your bloodstream. So I'm going, wow, I can't wait to start this. In other words, it makes the zinc even better. If I could only take one supplement, it would be zinc. I'd take zinc. That makes you bulletproof. I mean, you know, that stuff just helps you really ward off. You know, I haven't had a cold in 5 years taking zinc. And I go to the gym a lot. That's all there is germs crawling around there. So I know the only thing that changed my life was that I started taking zinc. Now I've heard about this quercetin, and I asked somebody, I said, okay, how much does this enhance, you know, zinc? And they go, a lot. And I go, okay, I'm in. You know, that's all they care about. That if I can get more zinc into my system, let zinc get into your cells, I know it has to be a positive thing. And I know it's proven and things like that. Hey, I'll tell you, guys, another one of my secrets that I'm putting in my $250,000 How to Be Like Me course. You gotta take saunas. Take a sauna. Take a sauna as often as you can. Super high health benefits. Keeps you younger looking. Good for your skin. All super upside, you know. So you gotta take saunas. That's another health tip I'm not sure I've ever shared with you guys.
Is being healthy addictive?
Yeah, it is. It really is addictive. You know, I mean, like that. You can get addicted to drugs, cocaine. You can get addicted to alcohol. You can get addicted to gambling. You know, once you start, it's something just like breathing. You're going to stay fit no matter what. And you know what? It is addictive because, you know, then it's a discipline. That discipline helps make you addictive. It's an addictive kind of thing. But also the rush you get, there's a rush you get just from looking good and feeling good, Jim. If you know you're in shape, you know, and people can tell. I mean, you don't have to be a big muscle man or anything, but people can tell who's in shape. And if you're in shape, it's really good feeling. And it's really good to, you know, mentally, it improves all these different aspects of your life, every single thing. So it's all up, health is all upside, no downside.
How about leaving us with some wisdom?
So I already gave you guys wisdom. You know what, how about giving it your all? Giving it your all. I used to tell my kids, always do your best. Don't ask if you're going to win or lose. Just give it your best. You know, a lot of whether you win or lose is dependent on a lot of things, including God. You know, there's a lot of luck in this world. So it's better to focus, you know, on the struggle ahead of you, what you're trying to do, and just give it your all. That's the best you can do. I never told you know, so that's my thing there. You don't know what the outcome's going to be. But if you have a good process for something that you've researched and worked in the past, that the probability of a good outcome is high. And that's as good as it's going to get in life, guys. You want guarantees, buy a toaster. Otherwise, play the odds. You just got to kind of go through life like that. Of course, you have to be able to figure the odds. Most people don't know how to figure odds. But, you know, you got to have some way of looking at things objectively, you know, to try to make the best decisions.
How can people find out more about your book and newsletter and your upcoming events?
They can go to my website at realestatetiming.com. and they can read about my book, see my book, see that, the timing letter I produce. There's a sample that you can look at too, if you get in there and do it. You can subscribe to my timing letter. It's for subscribers only. I have a blog, you guys, and I really enjoy doing that blog. And that attracts people, and I share some of my thoughts with people just about a lot of the things like, real estate economics and those kind of things, with giving them a taste of what I give people in my timing letter. So I really get proud of that too. I just don't blog a bunch of crap. I try to blog good stuff. So, you can go there and maybe be interested in buying my book, Timing the Real Estate Market, but at least you can find out about me.
Bob, thank you so much for being on This Week in Money.
Thanks, Jim. Talk to you later. Bye.
My guest has been Robert Campbell, author of Timing the Real Estate Market and the Campbell Real Estate Timing Letter. You can find him online at realestatetiming.com. He was speaking to us from San Diego. Coming up, Hilliard MacBeth, next on This Week in Money.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Hilliard MacBeth, author of the second edition of the book When the Bubble Burst: Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. You can find him on Twitter at HMacBE. Welcome back to This Week in Money.
Nice to be back.
Hilliard, would now be a good time to read your book, and where can people get it?
Yes, they can get it anywhere the best bookstores are, or online at the different services like Amazon, and also it's on ebooks as well. So it's easy to find. And the only thing I'd say is make sure you get the second edition. It's got the red cover, and it is still very timely.
Last week, the Bank of Canada was expected to cut quantitative easing bond buying by 50%, but it cut it by 100%. What's this likely to mean for the real estate market and the economy?
Well, we don't know if interest rates would rise just by that alone, but it certainly puts the pressure on because inflation, as we've talked before in the last few shows, inflation has been rising. And normally, when inflation is 4 or 5%, like it is now in Canada and the U.S., interest rates would have to be higher than that. And the only reason that interest rates haven't gone up yet is because the government has been buying most of the bonds. In Canada, they bought the majority of the bonds that have been issued. So that's kept interest rates artificially low. And now that they've announced they're going to stop buying them, then interest rates normally would rise. So unless there's another recession, it's quite likely that interest rates will rise. We don't know how much, but it could be substantial. In the U.S., they also announced on Wednesday of this week that they're going to taper. Now, they're not doing it as abruptly as Canada. They're going to cut back by a certain amount each month. And so by next June, so about 8 months from now, they'll stop buying altogether. So this is a test. They tried it once before in 2013. It didn't go well. Interest rates jumped by a full percentage point within a very short period of time, and it's now known as the taper tantrum. But so far, there hasn't been any tantrum. There haven't been any screaming and yelling and tears. So we'll see how it goes.
In Australia, interest rates are already going up. How long before higher interest rates get to Canada and the U.S.? Well,
they certainly. I think they're coming. I mean, the 10-year bond rates in Canada and the U.S. are around 1.6 to 1.7%, and the inflation rate, as I mentioned, is 4 or 5%. So that just doesn't make any sense at all. So now the Bank of England on Thursday this week, they surprised people by not raising the rates and not ending their QE program. So there's several different things going on, and different countries are taking a different approach. But the general step back to a broader view, the big picture. the central banks are aware that there's a lot of debt in the system. There's a lot of shaky debt in the system, a lot of speculative debt in the system. And they're really nervous about raising rates or letting rates go up, maybe more accurately. And so they'll be watching it really closely, and they could reverse course. If there's a sign that rates go up too fast and it's going to cause a recession, watch for central banks to backpedal very quickly.
When could we be near when the bubble burst moment for the real estate market?
Well, I thought it would happen by now, obviously. It's gone on longer than I thought. And, there's an interesting thing. So the basic principle was that house prices have outrun wage and salary increases. And of course, it goes back many, many years, probably 2 decades now. And in the last 5 years, the house prices have continued to increase, even though wages and salaries have not gone up very much. So the gap has gotten wider and wider, and that gap has been filled with increased borrowing. And so the new homes come on at a higher price. Existing homes can only be purchased at a higher price, and people have to borrow more and more. So eventually, unless wages rise dramatically, which is not going to happen, house prices have to come down. That was the original premise, and it's still valid. And the fact that it hasn't happened yet, for some people, it means, it won't happen. But in reality, if that basic premise is correct, then that means we're just that much closer to when it'll happen. So I would expect it'll happen soon.
When the bubble does burst, what are the first signs to look for?
That's a great question. We'll see in the big cities like Toronto and Vancouver, I think we'll start to see some panic because during COVID, especially in Toronto, a lot of people bought homes outside of this downtown core of Toronto, thinking that they need to have more space. And a lot of people are living in very small condos and not very happy about that. But they didn't sell their condos. So they kept both properties. And I was surprised that the lenders agreed to this, but they did. So now they're basically even more stretched than they would have been otherwise. They're living off the gains in the equity that they've had. So if we see people starting to put up for sale both properties to see which one will sell first, that would be a sign. I noticed in the city of Edmonton, where I'm based, that the city said that they have 145 properties that they were going to put to auction because of failure to pay taxes, and that's way up from a normal would be 5 to 10 a year, and they've got about 145. So they decided to delay it, to give people more time to pay their taxes. But the thing is, it takes 4 years to get to that stage where your property is going to go up for auction. They got quite a bit of time already. So I was reading this article, like, if they haven't paid by now, they're probably not going to pay. But anyway, that's the sort of thing you start to see when the bubble bursts. You start to see auctions of properties that either are in foreclosure or they can't pay the taxes on.
Is one of the reasons why house prices went up so much was there were so few foreclosed homes on the market where normally they sell for less?
Yeah, I think the attitude for the last few years has been, among the lenders, has been kind of like, we're going to help you get through this tough time. Maybe you lost your job, maybe you got divorced, maybe something else happened, some illness or something. And rather than foreclose and sell the house, perhaps after seeing what happened in the U.S. in 2009, where so many homes people were turfed out of their homes, they decided to take a different approach, and they decided to extend and help people get through it. And of course, they didn't forgive the loan. They actually make more interest that way because they extend the loan out over a longer period of time. And the regulators and the government allowed the banks to take that attitude. So we haven't seen the normal amount of foreclosures we would see. There's been almost none. And also the equity rising would help with that. But even in Edmonton and Calgary, where the prices have not been going up, we haven't seen the normal amount of foreclosures. So that's definitely contributed to it. But the main factor in the whole equation has been the demand that's been put into the market by the availability of a lot of credit at very low cost, very low interest rates with lots of credit, lots of easy terms. And that's basically, this is the one guy's called it the bubble of everything because it's not just in Canadian housing. It's in the stock market. It's in bonds. It's in loans. You can buy packaged loans, that sort of thing. It's pretty much everything has gotten really expensive because of the cheap money.
Do some real estate bubbles pop quicker than others?
Well, it's quite rare for these things to pop. So it's kind of like there aren't enough data points to be able to assess, the normal. What is the normal? There is no normal cycle because governments are so unwilling to allow real estate bubbles to burst. They'll do everything in their power to stop the bursting of a bubble like this because they know that most of the people that own homes are also voters, and they don't want to have that happen to them because inevitably when the bubble bursts, the government gets turfed out of the next election. So it's just quite rare. And so we have the 2009 crisis. We have very few examples before that. This is going to be unprecedented this next period when it becomes clear that people cannot pay their debts.
What percentage of Canadians are homeowners, or more accurately, holders of mortgages?
I don't know the exact number of that. I know that there's about 13 million households and about 9 million, so it's about 38 million in population. So about 13 million, so about a third of the population is households. So the average household has 3 people in it, and about 8.5 or 9 million of them are living in owner-occupied homes, and the other 4 million, let's say, are living in rentals. So of those 8 or 9 million, I see numbers from the banking industry that just, quite frankly, are hard to believe. They average it across the whole spectrum, and they say that only 50% of the value of housing is mortgaged, and the other 50% is equity, free and clear. However, it doesn't really matter because the people that have paid off their mortgages, older people, that sort of thing, they may have co-signed a loan with one of their children, and that wouldn't show up on their title. It wouldn't show up as a mortgage, but it's a liability nevertheless. But it's also true that it doesn't really matter of those, let's say, 9 million households that the owner lives in. It only takes 500,000 to 1 million of them to get into trouble, and that'll affect the whole market. So even if the other, so let's say 7 or 8 million of them were fine, the 500,000 to 1 million that are right on the edge of being in trouble, if higher interest rates push them over the edge, that'll affect all of us because house prices would come down, and it doesn't matter what the reason is. The house prices can come down, and they have to be compared to each other. So the real estate industry has to say, okay, that house. I mean, they could say, well, that house sold at a big drop in price because it was a foreclosure or something like that. But still, it's a valid price. It has to be recognized.
Could the bond market cause mortgage rates to increase significantly faster than the bank rate?
Well, the bond market, is in a bubble of its own. The classic was Argentina. So Argentina, I'd forgotten about this, but I was just doing some research on bonds, and Argentina sold a 100-year bond in 2017, and they've already defaulted on that bond. So those bonds now are trading at 25 cents on the dollar or something like that. They're probably working out some kind of a negotiated deal. It's the 9th time in recent memory, say in the last 120 years or so, that Argentina has defaulted on their bonds. So it's incredible to think that people actually were willing to buy 100-year bonds issued by a country that already had defaulted 8 times. So how many other stories like that are out there? So if the bond market gets into trouble, it'll immediately ripple through the mortgage market as well, and that'll push mortgage rates higher because people, people can be in the investment world can be kind of like sheep. If they get scared because of one thing, they actually get scared of everything. So anything that looks a little bit shaky, they're going to back away from, and they're all going to rush into. Usually, in the past, anyway, it's been U.S. dollar Treasury bills, which, of course, right now are yielding 0.5% or something like that. But if people are scared enough, they'd be willing to live in Treasury bills at 0% just for the safety.
Inflation, deflation, or stagflation? Your thoughts?
Well, I think we're going to see, I saw the former governor of the Bank of Canada on the BNN TV network this morning talking about inflation, and he followed the line that all the central bankers say, which is it's temporary, transitory, and transient. And he said by the middle of next year, the inflation will have come back down. Now, he didn't say come back down to a what, but the target that the central bankers had was 2%. Now we've seen several months when it's been 4 and 5%, and I noticed the other day that the people at the John Deere tractor manufacturer had gone on strike, and they were offered earlier this week. They were offered a 10% wage increase right away, an $8,500 bonus, and another 5% in 3 years, and another 5% in 5 years. So a total of 20% plus the bonus. And I thought that was the end of it. But then on Wednesday of this week, they voted it down. They took it to the membership and they voted no. They want more. So, the thing with those kind of settlements is we saw it in the 1970s. When people start seeing 10 and 20% wage increases negotiated, the next group wants to do at least that well. They don't want to accept less than that. They want either that, at least that, or more. So it ripples through and there's all kinds of shortages of employees out there, and all kinds of supply chain issues because they don't have as many workers as they need. So I would think that it's going to be more than just another 8 months of inflation. I think it's going to be longer.
Yes, friend of the show, Mike Swanson, pointed out that the U.S. has seen its third highest rate of strikes in history going on right now. A lot of them you don't hear about because they're not affecting you personally, but they're going on.
Yeah, that's an amazing, because when you think about it, the number of unions, the membership and the number of unions has shrunk quite a bit, right? Especially in Canada, but probably in the U.S. as well. There just aren't as many unionized workers as there used to be. And so for there to be that many strikes at this time is a warning sign. And I think, they have a legitimate, the original premise of my book, which the first edition of it came out 6 years ago, was that house prices and other things, but especially house prices, have gone up way faster than wages and salaries. And that's even more true today, several years later. So that has to be fixed somehow. And people are obviously feeling a lot of pressure and a lot of pain because they just haven't got the wage increases that they need to live in a society. For a long time, it could sort of be covered up by lower interest rates. There's a lot of people just think about their mortgage payments, their car payments, and because interest rates kept coming down, they didn't really notice it. But now they're starting to notice it, and they're demanding more. And I don't think that goes away overnight. I think that's unlikely to be temporary.
Are people still waiting for the COVID scare to be over before listing their properties for sale?
There's that, but I think there was another thing that was mentioned by one of the realtors from Toronto, and they said that sellers just don't know, because prices went up 20% year over year to last month, to the end of October. The sellers don't know what to do. They of course, greed would say, well, just hang on, maybe it'll go up another 20% in the next year, if they're thinking about selling. And people are afraid of, the FOMO, the fear of missing out, is one thing, but the fear of selling too cheaply is another thing, right? I don't think there's an acronym for that one, but people, unfortunately, they get really, really caught up, and I see this in the stock market a lot too. They really get really caught up in worrying about selling too soon and selling too low. But if it's time for them to sell their house, and if they got obviously most people would have a very substantial gain right now, it would be, that's the right time to sell. It's, so what if the guy that buys it makes another few dollars after you sell it? That's whoever's buying in this market in a bubble is taking a lot of risk, so they deserve a chance. But a lot of people want to wring that last dollar out of it, and of course the danger of that is hanging on too long and then missing out.
Is Canada's booming real estate market built on massive debt?
It is, yes, exactly. Canada has got the most amazing statistic is the amount of increase in debt in Canada compared to the other major countries. So there's about people can find it on my Twitter account. It's a couple of weeks ago probably, but it was a Financial Times, and they had Japan and the U.S. and the Eurozone and all the different, about 10 different countries. And Canada was the leader in the increase in overall debt. It was 80% debt to GDP increase in Canada. The average of the other countries is probably 30-40% in total. And that was because of the COVID. Obviously, people were spending more money going deeper into debt because of the COVID recession. But what's amazing about Canada, not only was Canada the leader in the total, so there's three components. There's personal household debt, number one, and then corporate debt, number two, and then government debt, number three. Well, everybody knows that Canada added $340 billion in debt in 2020, and that was by far the biggest in the developed world. But I was surprised that Canada also led as a percentage, they led the household debt and the corporate debt as well. So in all three categories, Canada was the leader. And in Canada, it's built on a massive pile of debt. And if interest rates go up, there's not much room. The last time this happened in a big way was in the early 80s, and everybody knows that interest rates went up to 18-19%. It took a huge increase in interest rates to choke off the inflation. Inflation at that time was around 10-12%. Interest rates went up to 14, 15, 16, 17%, and that finally choked off the inflation, and inflation started to come down. It won't take as much this time to choke it off. It's there's so much more debt now that an increase in, even a modest increase in interest rates of 3 or 4% would probably be enough to cause major difficulties and could break the back of the inflationary surge.
How significantly are Canadian banks exposed to mortgage and HELOC debt?
That's their biggest business. They don't, it's interesting. I always laugh when they come out with their quarterly reports. They're about to come out with their annual report here pretty soon because their year end is October 31st. So by the end of November, we'll see their year end. And, if any of the listeners want to, just for fun, look at any of the previous reports, and they'll talk about corporate and mergers and acquisitions and expanding into the U.S. and all this different stuff. And they never mention their core business, which is lending to households. That's it's probably 50, 60, 70%. It varies between the banks. Royal and TD are the biggest, the two biggest banks, and they're also the biggest in personal lending. And they actually lump personal and commercial banking together, so you can't quite segment it out, but it's their biggest business. And primarily because the rules are rigged, so that the regulator says that if you lend to households that are backed by real estate, a house usually, that's a very low risk loan. So the bank gets charged a very low risk weighting for that type of lending. So they've gradually moved more and more into that area. And there's been a big boom in people willing to borrow in that category as well, whereas business loans have been harder to come up with. But in the business loan, they get charged 100% risk weighting. In the mortgage end of it, they get their average risk weighting is about 8%. So it's the risk weighting is 12 times more severe by the regulator for a business loan. So the banks naturally gravitated towards that. So they're very exposed to the household, and they would say that it's very low risk because there's been very few losses in that segment, which is true. The last 20 years, there's been very few losses. You have to go all the way back to 1990, 95 for that period when they had any significant number of losses. So we'll see. I mean, they maintain that the risk is low. I don't think so. I think the risk is much higher than they're saying. But I guess we won't know until we find out what happens when the bubble bursts.
Properties in the Vancouver area continue to sell for well over asking in the fall. Have we seen this happen before? Yeah, in 2007 when we bought our last house, we went through that. It's a bit of a game that the realtors were playing back then. It was the peak in Edmonton, and they listed the house that we bought below the market, and we bid $100,000 over the market, so they could say, "Oh, it's sold at $100,000 over the asking price." But it was artificially low, the asking price. So that doesn't mean anything. It's like it doesn't make any difference when you say, "Oh, it's over asking." It's a game,
And if the realtors decide to play that game, then that's what happens. They get these headlines, and then that gets everybody excited. So, I got a bit higher, and I wouldn't be surprised if some of these cases there's only one bidder. The buyer is bidding against himself, but you'll never be able to know because these things are not revealed as to how many bidders there were and that sort of thing. In Australia, they do it differently. They have auctions, and everybody can sort of see what's going on. Although there are some quirks about the auction process in Australia, but in Canada, this bidding above asking is generally something that only happens right at the peak of the market, just before the bubble is about to burst.
Will the cutting of QE affect HELOCs being used to buy additional properties, vehicles, and other things?
Well, I think not directly, because there's two different things. Of course, the QE, they've been buying government bonds and government guaranteed mortgages like CMHC mortgages. Those are the two main things they've been buying. So indirectly it could affect HELOCs, that sort of thing, but I would think it wouldn't directly affect them much because the HELOCs are not something that you can trade on the market like a government bond. But indirectly it could have an impact if the house prices level off, or even, heaven forbid, start to come down. The amount of equity available to HELOC would shrink, and also the banks could change their attitude to HELOCs. I think they've been very aggressive in promoting HELOCs for about at least 10 years now, but they could start to get nervous about the risk of because essentially what it is a second mortgage. And in the old days, the banks wouldn't even do a second mortgage. You had to go to some other mortgage provider to be able to get a second mortgage. So we'll see if those kind of days come back where the banks are more conservative about that more riskier type of lending.
Is the cutting of QE likely to boost the Canadian dollar?
Well, that's a great question. I think the Canadians were out in front in terms of that, and it actually did boost the dollar a little bit initially, but this week the dollar's been quite weak, and I don't know if it's because of concern about the Canadian economy or if it's got to do with the oil price. Generally, the Canadian dollar's been more affected by oil prices, and they have been very strong. OPEC's had a meeting this week, and OPEC refused to add additional barrels beyond what they had said, and the U.S. government was after them for that. But the Canadian dollar actually has come off a bit, so I don't know if it would have that much impact.
Do you see any positives with the new Trudeau government?
I think that the new government is going to be really struggling to on a couple of fronts. They're going to be struggling with what to do about global warming. They're at COP26 in Glasgow right now, and they made a commitment to cap the emissions from greenhouse from the oil and gas industry, which is going to set up a huge fight between Alberta and Ottawa. But to meet their targets, even the targets they've already announced, which aren't really that aggressive, there's going to have to be a major adjustment in the emissions from the oil sands, and that's going to be a fight that'll get quite ugly. So that's on the one front, and on the other front, if the housing bubble does burst, they're going to have their hands more than full of trying to help people get through that with homeowners that lose their houses, and with lenders that get into trouble because some people aren't paying their mortgage payments. So I wouldn't expect too much from the government. They're going to have their hands full with just trying to cope with those kind of things.
Following Prime Minister Justin Trudeau's spending spree, are higher taxes a given?
Well, there's a lot of people are concerned about having to repay the debt, and yet, when you go back to the very beginning of governments borrowing money, there's almost no instances where the government ever repaid the debt. So what happens instead is that the debt keeps piling up. And the modern monetary theory talks about that and says that debt is just a record of how much the government has spent into the economy, more than what they've taken in through taxes. So the government could try to collect the money from taxes, but it wouldn't work because raising the taxes by that much would just trigger a recession, which would mean that they'd collect less money rather than more money. So what will happen is the debt will become quasi-permanent, and we'll just hope that the economy grows fast enough so that we make the payments on that debt. There's no, unlike an individual household where you kind of eventually have to pay the debt back, the governments never have to pay it back.
How do you think the Agenda 2030, the Great Reset collaborators, will make people own nothing and be happy about it?
I don't think that's going to happen. There was a thing, for instance, just to take one example of, several people have mentioned to me recently about the ownership of cars, and they say, well, the day will come very soon when you won't own your car. You'll just call it up on an app on your phone, and the car will appear, and you'll get in it, and you'll use it, but you won't feel any attachment to it. I think that could happen. I mean, technology, by 2030, the ability to do that will probably exist. But I think people like that sense of freedom and that sense of ownership, the flexibility that comes from being able to own their own vehicle, although it is inefficient because obviously the vehicle sits for 23 or 22 out of 24 hours a day. It could be used much more efficiently. So there are, the other thing that people are talking about this, the Great Reset, are talking about the digital currencies. And, I don't know enough about the central banks, and they have been talking about digital currencies and then the Bitcoin thing, of course. And so there might be something there, but I just haven't yet got my head around where we're heading. But we do know there's a lot of change coming at us really fast, and I think it's making a lot of people really nervous because people often don't handle change very well.
With the continued push towards Agenda 2030, the Great Reset, does owning real estate make sense?
Well, I think that gives people a sense of like they're tied down to something. I because of the book, I've had a lot of conversations with people, and when house prices are dropping, if we ever get to that point, it actually makes way more sense to rent rather than to own. But there's a lot of disadvantages with renting. You don't have control, and you could be ousted, and you could be evicted, and there's all kinds of issues with being a renter compared to being an owner. But it would make sense if house prices are dropping. It would make sense to you can't possibly make up for even if you're paying $5,000 a month in rent or $6,000 a month in rent. Any average home in Canada is going to lose you more money than you'd be paying in rent. So. Yeah, there might become a time when it makes more sense to not own, but I don't think very many people will do it.
People online are predicting that COVID deaths will leave a lot of empty real estate. Do you think this could affect real estate?
I don't think. I think there's 700,000 deaths in the U.S. That's one of the most heaviest death tolls in the world, I think. That's not a lot when you consider there's 100 million, roughly, households in the U.S., so it wouldn't even be 1%. I wouldn't think that would show up in the numbers. If the death toll were to go up, I think the death toll worldwide is 5 million, and out of 7 billion people, that's pretty tiny. If it carried on for another 5 years, I don't think it will. Then it might start to impact. But so far, it wouldn't be big enough to make a difference. And the average age in Canada, the people that have died, if the reports are correct, is something like 85. So a lot of those people are not living in a regular house anyway. They're living maybe in an apartment or seniors living or something like that. So there might be some vacancies in the seniors living quarters for a while. But there's lots of baby boomers that are headed that way right now, so those spots will quickly fill up.
What are you hearing out of the United Nations Climate Conference?
So the COP in Glasgow, I haven't, so far the first couple of days were world leaders, and they're sort of, one of the things that happened on Thursday was a surprisingly large number of people signed up to the No More Coal pledge. So a lot of countries are still using coal, China and Poland, Korea, countries like that, and even Poland, which is one of the most heavily oriented to coal in the world, signed up for the pledge to get rid of their coal-fired electricity. So that makes a big difference because the biggest emitter of greenhouse gases is the coal-fired electricity production, and it's also probably the easiest to resolve. Another big one is automobiles, the internal combustion engine. So those two things seem to be moving fairly quickly, and so that's a big positive. But the first couple of days was taken up with the world leaders, coming and making speeches or whatever, and pictures of Joe Biden falling asleep, pictures of Boris Johnson falling asleep. Justin Trudeau made some kind of an additional pledge that we mentioned already about the capping the emissions from oil and gas. Now the thing moves into where the more like the worker bees are making getting together and working exactly how to do all this stuff. So that it'll sort of go quiet for a while, and then in about 3 or 4 days we'll start hearing what's happening.
A number of automakers are now introducing electric vehicles. Do you think these electric vehicles will be strong competition for Tesla?
I think eventually they will. I know Volkswagen came out with just on Thursday, they came out with a new SUV vehicle that looks pretty interesting. And I noticed on the TV ads by one of the Korean manufacturers for plug-in hybrids, and it got me yelling at the TV because they said the ad shows this guy going to the gas station and say, well, I don't need gas anymore. So I actually looked up the car, right? And it's got a 30-mile range on this tiny little electric battery that it has, and the rest is, of course, a 4-liter gasoline engine, right? So obviously, we know that most hybrids are run on gasoline most of the time. They use the gasoline engine to charge the battery. They can also plug it in, but a lot of times they don't bother, right? So it's very misleading. The ads are very misleading. So that is not a competitor to Tesla, but some of these other ones, there's Lucid, there's Cadillac. Of course, these are very expensive cars. Cadillac has a new one called EQS. Even Toyota, who's been very slow to come around, has started to advertise an all-electric that'll be available by the middle of next year. So I think by about June of 2022, we'll have several decent offerings on the market that people can buy instead of Tesla. But right now, most of the electric vehicle sales, even in Europe, are still Tesla. Volkswagen is the one manufacturer that's really struggling with this openly in terms of not wanting to lose all of their. The unions in Volkswagen are really upset because the head of Volkswagen's been meeting with Tesla, and Elon Musk even appeared on one of their company conference calls, and of course Tesla's not unionized, so that's caused some problems there. But it's unlikely that all of the incumbents will be able to make the transition. It's just too difficult.
Well, when the automobile was first introduced, there were hundreds of car makers in North America, and that slowly shrunk down to Ford, Chrysler, and GM.
Yeah, and they all went bankrupt several times.
Except for Ford.
Yeah, no, Ford did too. Ford went. Henry Ford himself went bankrupt twice, and then the third time, when he got the Model T, he got going, but or the Model A, I could never remember. Anyway, it doesn't matter. One of them, and but he had 2 tries before that, and then of course there were so many different car manufacturers. But I was surprised to learn recently that 30% of the models on offer in 1900 were electric, and then of course the gasoline was considered to be more flexible and more easy to use. But the early ads for the electric cars were kind of like, who wants to sit on top of an explosion? Because essentially, the people thought the gasoline was too dangerous. And so it took a while for people to accept the idea of gasoline versus electric. But it was more convenient than electric. They didn't have the charging stations. They didn't have the, they didn't even have the electric grid at that time. So at that point, all they'd really done was electrify the lighting in some of the houses, only for the rich people. Actually, the poor people were still using kerosene lighting. So it was just a little bit too early for the electric car. But yeah, it was. We're going to go through a similar period where it's just a free for all, and lots of wild things are going to happen. But it's going to eventually be all electric for sure.
Hilliard, just a reminder once again, where can people get your book?
They can get it at any of the best bookstores or online with Amazon or Kindle or Kobo or any of the chapters, Indigo, that sort of thing. You can get it anywhere, and make sure that you get the second edition. It has the red cover.
Hilliard, thank you so much for being on This Week in Money.
Thank you very much.
My guest has been Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. You can find him on Twitter at HMacBe. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Robert Campbell, and Hilliard MacBeth. And thank you for listening. If you have any questions for the show, you can send them to info@housestreet.com. Now stand by for a company showcase update from American Manganese CEO Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to Company Showcase, Larry.
Thanks, Jim.
Larry, another busy week around your office.
Yes, it's been busy. We got a lot of pushback on a release that we had put out, decreasing the price on the 263 options to non-insiders, and that was not received well. But I have to tell you that part of the package that these guys get, and in order to keep them for as long as I've kept them, and I do need those people. Because, this is we put a lot of information out. A lot of the information comes out through them. And, so they're getting a small stipend, but, that's not enough to keep them working. They want to see some upside, and options are the upside. So we reduced the price from $2.63 down to $1, which is still a 20% premium over the price of the stock. Now, that's one way to keep your people intact. Some of these people have been with me for up to 40 years, and I want to keep them intact and give them incentives to continue to do the work that they're doing for us. So that's the whole idea behind it. The insiders, such as the directors and officers, did not enjoy that benefit. We're still up there at 263. And that's the way it should be. But to push back on the little guy is way beyond me. And so that's the rationale behind it. That larger companies like Google and all those are losing employees, due to the fact that they're not satisfied with the management, or they don't see any incentive to stay with the company. And this is happening right down to McDonald's, and you name it, you're losing staff. And I don't know where these guys are going, but I guess they feel that they may as well, get on the dole if that's the way it is, and make as much money as if they were working. So we don't want that to happen with our organization, and so we reduced those options to keep that incentive alive. Now, let's move on to some of the things that are happening out there in the real world, and that is that the margins are starting to get squeezed on on what a recycler will pay for a battery, and it originates out of China, where they have the ability to basically pay more for the batteries than the recycler could, and run them through their systems and either break even or still make money or even lose money. But it kills the competition, and that's why we've been working so hard for the last 5 years to come up with a project that's as bulletproof as we can make it. It's not just for the environment, but you have to make money or else you're not going to succeed. So our end product, the precursor, is sells at a premium. So we'll get that premium, and but in the same regard, we should be able to get a lot of contracts once this thing's perfected, and contracts with companies that basically want to turn around that 10% loss they're getting. And remember, when you're first starting out as a manufacturer, your losses can go up to 50-60%, or let's say an average of 30%. So that's a lot of material, a lot of scraps that are going to come loose in the first year with a new battery manufacturer. Everything doesn't work perfect. And so, as far as I'm concerned, we're in a real hot position, a very good position. People are not recognizing that yet, although we've talked to a lot of these OEMs and a lot of these future battery manufacturers, and so they're well aware of us. It's not that we're working in the dark or hiding our light under a leaf. We're basically, moving ahead with a project that makes sense, business sense, and makes sense as far as the environment's concerned. So that's something that you won't read about it. It's something that the industry does not like to have anybody know about. You're not going to read about all this stuff in the bulletins that come out, or from a company that's producing batteries. They're not going to say that they have high losses and high turnaround in battery materials. So that's just not going to happen. And because that's very negative for the startup, and certainly they want to get through that period without pointing out the risks. So let's just say this, that we talked to enough of them. We've got a pretty good idea on what the going rate is for batteries. I won't say that, and but I imagine a lot of our competitors are seeing this because they're producing black mass, and then they want to get those batteries to produce the black mass, and then that black mass, they want to turn it into whatever kind of a solution they have at the end of the day to put the material out to the battery manufacturer. So we've had our head down and our butt up. I've said that many times, and the whole idea is to come up with the best product at the best price, and the best price being what we can get for it. And so there's a reason for everything, guys. It's not people will find themselves in a bind. Other recyclers definitely will find themselves in a bind. It certainly would have far-reaching effects for us. But we feel that we've got the solution, and that we're 90% of the way there. And once the demonstration plant's up and running, and I hate to say it, but the delivery times are the shits, and so we haven't been able to start on that project just yet. But once that's done, we can actually design and pre-order the pieces for the commercial development. So. That's it for me today. I wish everybody a good weekend. It's here that the forecast is for the same great weather we've been having, lots of rain. And so there probably won't be many people going out to any recreational areas, but it's still the weekend. You can rest up and get ready for the next week.
Larry, for people who are new to American Manganese, what's the company all about?
American Manganese is a critical metals company who developed the process for treating low grades of manganese When I'm talking low grades, I'm talking 2 or 3% grades that you would walk over on any other project. But that happens to be where the bulk of the resources in the U.S. lie, is in very low-grade material. And we developed a process that competed with China. And then the price of manganese metal went down. And luckily, we were able to get funded by the Department of Defense, or the DLA, and move that project on to actually testing the strategic stockpile at Wendon. We've done the first phase, and we're hoping to get a second phase, which I'm optimistic about. And that's where we bring in the pilot plant work, and so it's been a busy time. On that regard, we've taken that process as a cornerstone of our lithium-ion battery recycling, and that's working out very well for us right from the get-go. And we've managed to raise all the money we needed to get to this point. We've just done a $20 million raise, although you think that that I'd given the shares away to the management or something, because $20 million is pretty much gives us a clear path to commercial production. And so it's a great company. You can read all about it. We're very transparent about the results. You can go to our site at AmericanManganeseInc.com. We're traded on the Toronto Venture Exchange under the symbol AMY. We're traded on the U.S. QB board under the symbol AMYZF, and we're traded in Frankfurt under the symbol 2AM. You can reach the company at 778-574-4444, or you can email me at LREAUGH@AMYMN.com.
Larry, thank you so much for the update.
You're welcome.
My guest has been Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on November 5th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.